Good morning, traders and investors around the world. Welcome to this Friday, October 1st, beginning of the quarter, crazy day edition of pre-market prop with stock odds. Joel L. Connon with Rob Friesen on what has turned out to be a very, very volatile day in the markets. We were down, we were up, and now we are down again, trading off the lows of the regular session, down 14 and a quarter handles at 42.83. We are off the pre-market low of 42.60. That's the good news. Boom, we've already exceeded our average daily range, but on a day like this, I'm not gonna make it hazard to guess anything. Crude, 75 bucks.
You want to share your screen there?
Yeah, I'm too busy talking here. Hold on, let me get my my zoomer up. And oh, that's not what I wanted to do. Where is my zoom control? Here it is, right in front of me. Crude, it's trading just about mid-range for the week. $75 down 4 cents. Gold up 590, 1763. Silver finally outperforming gold for once, up 49 cents at 22.54. Bitcoin, big day for Bitcoin. That's up 38.55 at 47,470. Ethereum futures, they're in the green too, 227 and a quarter at 32.75. That's to take a look at the markets. Oh, where do you want to start, Rob? I will let you take the floor here and tell us about what you were thinking at the open, how things adjusted. I would be imagined that your longs, some of the longs that you were thinking of taking, man, I mean, yeah, the market was down and was up. I mean, how did stock odds come out today? Actually, I have no idea. Why don't you share with us? Did you have more longs or more shorts?
No, actually, I have equal a number of longs and shorts. The thing is, I did a lot of curation of stuff actually this morning rather than last night, just because I wanted to see how things set up. So normally I do it the night before. I kind of got some ideas, and then I just waited till this morning to kind of do the list. And
because it was because it was the end of the quarter? Was it because of the way that we closed? What made you make that little adjustment?
Well, we have it's kind of a serious technical break on some markets. The Dow held up without that technical break, but when you look at things how they should perform, I realize it's the first day of the month and the first Friday, but it's still that the weight would go to the first day of the month, which is more powerful than the first Friday. First Friday is just like one of those seasonality things we just curate, because we also curate the expiration Friday and the last part of the month and stuff like that. So but the weight goes to the first day, and the first day on October is generally not performing that well anyway. So then you add in all of this government shenanigans, and you also look at what was happening with the yield, so the bonds and the yield, and then the US dollar, right? So we can kind of flip through a few things, but my thoughts about this morning were simply this, and I mentioned it to some of my guys, and what I was thinking is, one stock does not a market make. Which stock am I talking about?
Merck.
Yeah. Okay. But does it make the market? Did it moved the futures, and it was responded positively, but it doesn't change the dynamics of the market completely. But it's not like suddenly it's going to be a risk-on environment just because Merck came out with a therapeutic, right?
That's when we were, we do the pre-market show, and Spencer and I have a little side bet that we made about 3-4 weeks ago. He gave me odds of 5-1 that the market would make a new all-time high by the end of the year. and we had pulled off pretty good. And so he was a little giddy this morning, because it looked really bad overnight. And I said, Spencer, I said, it's Merck. This is one stock. There's still a lot of other problems out there.
Yeah. Okay, just think about it for a minute. Merck, the old, the 100-year-old Merck,
Dinosaur.
comes out with a therapeutic because of some other company that made a deal with it, blah blah blah, right?
Yeah.
So is that going to bring in thousands of Wall Street bet and Robin Hood traders buying everything that he could see? I mean,
No.
come on, right? Okay,
No.
it'd be a lot different, if something happened in the tech space that was just revolutionary and it started to lift all the techs. That would be a lot better way to draw things in. But anyway, I just said, well, one stock does not a market make. So my approach to today was to try to be somewhat diversified in terms of longs and shorts, not to really use too much of the ETFs. So I'm just very lightly in a little bit of SPY and diamonds just to adjust things. But other than that, trying to stay away from that. But I did look at the group's pre-market. So I looked at Merck's performance, and I looked at Regeneron and all the other ones too, and sort of like, it was unfortunate because I really wanted to be short healthcare today anyway, just on a rotational basis, and some of those things were gapping down way too much. So I am short healthcare stocks largely, but not the ones that were gapping more than 5%. So just FYI. I looked at the pre-market. I'm long tech. I'm long basic materials. I'm long some discretionary, long a little bit of consumer defensive, short some utilities, short some REITs because of the 10-year. So the 10-year was moving, and the dollar was moving, and so that's the sort of the opposite of long financials and all the other stuff. You follow what I'm saying?
Yep.
Okay, so we've had that. Let's look at it on screen. It's probably a lot easier here.
Sure.
I'll just share. So there's the map of the market there.
Okay.
But in the pre-market, I like to look at sort of what groups are moving and so on. So you can see healthcare. Healthcare was already indicated down in the morning. Technology was a little bit better than what it's showing now. So there has been a little bit of flip-flop here. So my results today are flipping back and forth from green to red. We'll see how it plays out by the end of the day. But so I'm not concerned about the day, and it started out really well. You got some good movement on some of these things early. So we'll see if it flips back that way. But this is really an important thing, is to sort of dial into what the groups are doing. And there's always this question, this argument of the ones that are up a lot, will they be a great opportunity to get that premium that we talk about shorting on the open, right? And the ones that are discounted a lot, could they be a great opportunity to buy and get some of that discount and come back? So there's that argument versus, do you go with it, right? So normally on the first trading day of the month, you see a redeployment of capital that is usually fairly consistent. So let's just frame this. What is normal versus what is the kind of day and days that we're experiencing? So what is more normal is the things that you see pre-market on the first day of the month have that consistent flow of traffic throughout the day. Make sense? Because it's a redeployment, funds are back in, things like that.
Yep.
But the thing that's in the mix of all this that's making it more difficult to just go with what's normal is the government stuff, and this flip-flop of the the 10-year and the US dollar, and we had some technical breaks which are going to keep some people out of the market. There's a lot of overhang and a lot of concern. So I think most of the StockOdds people that were subscribers and things were probably looking at things a little bit more diversified across the board, take odds on a broad spectrum of things rather than focus and say, I'm going to be just long one group and short one group. So you do take more risk with that. So it could come back to bite me by the end of the day if I expose myself too much to healthcare short and it comes ripping back. Do you follow what I'm saying?
Yep.
I'm short healthcare, but not the ones that were deeply discounted because I didn't want to short them down there. Neither did I want to buy them down there. But that might come back to bite me if this thing roars back. Other than that, it's doing pretty good. So we'll look at a few groups. Let's see here. Let's look at the futures. And it's really important to, when you start a new quarter, to just kind of frame how things have been the previous quarter, where we ended up and stuff like that. So let's roll down to, the currencies here. How are the commodity-based countries doing? We got Canada, Australia, New Zealand. They seem to be popping back up off the bottom here over the last 3 months. And the US dollar is just rolling over. You see the last 2 days here rolling over from this massive move that we had from down in the 91.50, 92 area up to 94.50. So it's just starting to roll over. In the end, we got the 10-year note here. We saw that big decline, and we're just starting to reverse here a little bit. So just think about that dollar move. If that continues to pull back, what is it going to impact? Again, domestic versus international stocks, commodities, things like that. So we move over to the, let's just look at it this way here. Click on here. So look at how the Dow is held up a little bit better. S&P, we have more of that technical break. So looking at this low as a possible area that we want to test, which corresponds to that high. Here I am talking like now, technicals. So, right?
Now I'm scared.
But if it's going to still give some room to move lower, I mean, you'd want to test that July low. That seems like a really good spot to then launch from and give some more confidence, and people say, well, it tested, it held, it bounced back. So that would be an important area, I think. NASDAQ.
Why does we always have to bounce? Like, well,
it doesn't have to bounce. It doesn't have to bounce.
What if we turned? What if we've turned? Maybe, I don't want to say bear market or anything. No, we're so far down the technical thing, but I think one thing, and I think that what we want to get people away from, from the stock odds is that's what the odds say, right?
Right.
That the market always go up, but what's there to say that we're not in a consolidation or beginning of a bear market?
No, I mean, we love bear markets. We love sideways markets. I mean, these can be some of the best for trading the noise and some of the signals from day to day. I love stocks where, it could be a really boring stock like Annaly Capital, and it's one day up, one day down, one day up, one day down. Yeah. I love that flip flop. I mean, because that's what noise trading is all about. But looking at how we're going to sort of posture ourselves, we're at the end of a quarter, we're going into a new quarter, last quarter, and October is one of those months where you can have volatility. It doesn't necessarily mean it's a down month, as we talked about yesterday, but it can be volatile. And so, we might be in a completely new regime in the sense that, we really have rolled over, and I allow that. I mean, I also allow us to think about, what if we continue to sell off, where would be the likely test points that could cause a bounce, or
Right.
could be the end of the move for now?
I mean, think about this. We've been up 6 quarters in a row.
Right.
Right. We barely eked out this quarter by the hair of our chinny chin chin. We've only had back-to-back down months twice in all of 20 and 21, which is highly unusual. I mean, this, all things are pointing to, the technicals are pointing to like a sustained correction here. So, that's good, because with corrections, there's always better to have a two-way market, right? Because, you get the bounces and everything. But
Right.
yeah. So anyways, I'm sorry to interrupt you.
No,
but,
no. This is what the discussion is all about, because this is the hard part of, even investors. We have some people, that listening to us that, they take longer term swing trades, and they're looking for, is this a good time? Have we pulled back enough? A good time to put some money to work? So yeah, it's challenging to know whether we're going to have more of a down market from here for a while, or whether we're going to be
not a good start to the quarter, and not a good start to October. Rob, when you have longs in a sector, do you hedge for that specific sector, or do you just stay net dollar balance across all your positions?
So again, if you want to reduce variance, it will lower the return per day, but on an average, it could create, pretty good results. And that is being long some utilities and short the XLU, or being short some utilities and long the XLU. It's your choice. But because you're hedging the group to some degree, it's going to lower your variance. When you make a decision to, let's say, I'm going to go into StockOdds and choose the most advantaged shorts within healthcare, like I did, I'm going to sort of, make it or break it based on that decision. So whenever you make discretionary decisions related to money flow, you're going to be really right, or
really wrong,
or you could be really wrong, right? I mean, you have to accept that. So I mean, I think I'm okay. Like I said, it started really green this morning, and it pulled back, and it's starting to head back to where it was this morning. So I think as long as that healthcare doesn't flip on me, I just look at it like this: Merck's not going to change everything. In fact, it impacted some things negatively, but it's not the panacea. I had already planned to be short healthcare. I just saw this morning as a confirmation, and I went with that. But the areas that I'm a little bit more concerned about is that I'm short some financials and long tech. And the area that could harm me is that area where I allowed more risk on with the tech and the discretionary. Does that make sense?
Yep.
So normally for the first day of the month, you would want to play this, what's called the turn of the month effect. You have a down day before, and then the first day of the new month, the redeployment of capital, the risk on. So typically the first day we should be able to go risk on. I wasn't too confident about being blazing, both guns blazing with risk on. So that's where, hedging a little bit more, not really. I'll give you an example of ripping it. Would be if you thought it was totally a risk on day, there was so many confirmations of that, and the conditions were just right, you would be long Russell components, small caps, even some micro caps, and you would be short, the most fully valued, boringest stocks in the world that have no growth potential, right? You would be short those. You would be long the ones that have tons of potential, or you would just use, your ETF index ETFs. Okay. So that's full risk on. I'm not like that today. I'm more of a balanced approach, where the only thing that I'm kind of opening up is I'm short some of the defensive stuff, like healthcare and things, and I'm long a little bit more technology. So that's how I opened it up. If that doesn't work, then yeah, I might have a day where I'm down a little bit.
Okay.
So I'm trying to give some insights here into how you think about things when you first start. Really be insulated. Like we have in the screener here, we have what's called pairs, and we have US tradable pairs, which are co-integrated, and we have components. So you could go into XLF, for example, and you could just go into let's see here, get rid of those, and you could just say, I'm taking symbols against the XLF, or you could sort this by odds and say, okay, here's the symbols that have the best odds of performing against the XLF. I'm going to be long, five or more of these, and then flip it to the other end, and I'm going to be short the ones that are supposed to underperform against the XLF. So you're in the same group, and you're long some symbols that have better prospects, and you're short the ones that have less prospect, right? And if you need any capital filler, you could use XLF.
Okay. All right. Well, it's a complicated day here on Wall Street. We're holding above the pre-market low. I think for the remainder of the session, there's a big gap between that pre-market low 42.77 and the regular low 42.60. To me, I'm going to be keeping an eye on that close, that quarterly close at 97.75 after all this activity. If the up, the down, then the up, then down again, I think if we close green today, I think that'd be a good start to the quarter. I don't really go much on a quarterly, on a 1 day basis, but down week for the market, beginning of the quarter, a lot of volatility today. So looking for us to turn green from a quarterly number perspective. We're starting out negative at a sell, and with the price action that we have right now, I'm looking for a down week next week. So we're going to wrap things up here on pre-market prep with StockOdds. Thank you all for joining me. Have a great day, and if you guys are interested to see what my thoughts are at 3:30, join me with Spencer with At the Close 3:30. Thank you all. Have a great weekend. Thanks, Rob. Great information.
Yeah. Take care. Yeah, thanks.
Bye.